Hillary Clinton is the mainstream choice. She would be more of the same as from what we know from the Obama administration, but with the Republican-dominated Congress, I think it's quite doubtful that whether she would be able to actually implement a lot of the things that she is promising in this campaign. Regarding Donald Trump, that's the wild card, and I don't have a lot of really positive things to say about him, but there's one thing that I would warn investors about, that is staying out of the equity markets because of him. He has actually launched the initiative to make a very large tax deduction across the board. For example, with the corporate tax rate being reduced from about 35% to 15%. And I think if Donald Trump is actually elected president in the US, and he would be revealing, or not revealing, but saying we will actually power ahead and try to really implement this tax deduction, it's hard to imagine that the stock market would be down on such a day. It would actually be rallying quite hard. So that's a risk of not being invested in the equity markets. As I've been talking about for a couple of months, inflation is actually fast approaching, and that is because of the base from which we calculate the yearly changes is dropping fast in 1 month. So from 1 month, in 1 month and until January, February 2017, the energy price would be dropping very fast. So when we calculate the yearly changes, we would have far more than 50% increase in energy prices at the current prices if they just continue at this level. And so we will have headline inflation figures coming out quite a lot higher than what we currently have, and that will happen in very few months, like 2 or 3 or 4 months from now on. Inflation expectations are already edging higher, despite nominal rates going lower. So I think the market is about to get that we are actually seeing some changes in this regard. I don't really see a lot of things to be scared about, like more things than usual for the equity investors. There's always an unstable Iran, or a US presidential election, or a German election, or a referendum, or there's all kinds of event risks for equity investors all the time. And I don't think that we have more risk currently than what we usually have. And as I began saying about the prospects of Donald Trump being elected president, if you're actually out of the equity market when he is powering ahead with a plan to decrease the corporate tax rate from 35% to 15%, I think that would be a major risk of staying out, because it's hard to imagine that equity markets would be down on such a day. Likewise, for the so-called Mumble indicator that we are publishing every month, it is declining a bit from the end of August, but it's still very positive. So it most likely will have a positive return in equity markets for the month of October as well.